Do you know how to talk about investment with a financial advisor? At first, you subscribe this channel and please on notification bell icon. Okay, let's start. Have you ever wondered how some people grow their money while others struggle just to save it? Why do some people retire comfortably while others worry about money for the rest of their lives? The secret is not magic. The secret is smart investing. And today, you are going to listen to a real-life English conversation about talking with a financial advisor. This conversation will help you learn how to speak English confidently and also understand the basics of investing. So listen carefully, because this conversation might change the way you think about money. Scene 1. Meeting the financial advisor. John walks into a financial office. He looks curious but slightly nervous. He has been saving money for a few years, but he doesn't know how to invest it properly. So today he decided to meet a financial advisor. Advisor: Good morning. Welcome. How can I help you today? John: Good morning. My name is John. I've been saving money for a few years, but honestly, I don't know how to invest it properly. Advisor: That's completely normal. Many people save money, but they don't know how to grow it. John: Exactly. I keep my money in a savings account, but the interest is very low. Advisor: Yes, savings accounts are safe, but they usually don't grow your money very fast. John: So what should I do? First, let's understand your financial goals. Because investing is not only about money, it's about your future. Scene 2. Understanding financial goals. Advisor: Tell me, John, what are your financial goals? Well, I want to buy a house someday. I also want to retire comfortably. That's a great goal. But let me ask you another question. When do you want to retire? John: Maybe around 60? Good. That means you have time to invest and grow your wealth. Time is actually one of the most powerful tools in investing. Really? Yes, because of something called compound interest. When you invest money, your money starts earning money, and then that money earns even more money. Wow, that sounds powerful. It is. That's why people who start investing early often become financially successful. John: But I'm a little afraid of investing. Why's that? Because I hear stories about people losing money in the stock market. That's a good concern. Investing always involves some level of risk, but the key is managing risk wisely. How do investors manage risk? Through something called diversification. John: What does that mean? It means you don't put all your money in one place. Instead, you spread your money across different investments. For example, stocks, bonds, real estate, mutual funds. This way, if one investment performs badly, others may perform well. John: That makes sense. So diversification protects investors. Exactly. It reduces risk and increases stability. Scene 1. Types of investments. Let me explain some common investment options. First, stocks. When you buy a stock, you own a small part of a company. If the company grows, the value of your investment increases. John: But stocks can go down too, right? Yes, they can. That's why stocks are considered higher risk but higher return. Now, let's talk about bonds. Bonds are basically loans you give to governments or companies. In return, they pay you interest. So bonds are safer. Generally, yes, but the returns are usually lower. John: I see. Advisor: Another popular investment is mutual funds. These funds collect money from many investors and invest in many different assets. so you get diversification automatically. John, that sounds easier for beginners. Exactly. Many beginners start with mutual funds or index funds. Scene 5. Long-term thinking. Advisor, one of the biggest mistakes investors make is thinking only about short-term profits. What do you mean? They buy investments, then panic when the market goes down. John, I think I would panic too. That's normal, but successful investors think long-term. The market goes up and down, but historically, over many years, the market tends to grow. John, so patience is important. Very important. Investing is not a get-rich-quick strategy. It's a long-term journey. Scene 6. Investment plan. Now let's talk about building your investment plan. First step, create an emergency fund. John, what's that? Money saved for unexpected situations. Medical emergencies, job loss, urgent expenses. Usually 3 to 6 months of living expenses. John, that sounds reasonable. Advisor, after that, you can start investing regularly. Even small amounts every month can grow significantly over time. Really? Yes, consistency is more important than starting with a huge amount. Scene 8. Emotional investing. Another important topic is emotional investing. John, what does that mean? Many people make decisions based on fear or excitement. When the market goes up, they feel greedy. When the market goes down, they feel scared. John, that sounds like human nature. Exactly, but successful investors control their emotions. They follow a plan, they stay disciplined, and they focus on long-term goals. John, this conversation has been very helpful. I feel more confident about investing now. Advisor, I'm glad to hear that. Remember these key lessons. Start early, invest regularly, diversify your investments, think long-term. John, thank you for your advice. You're welcome. And remember, the goal of investing is not just to make money, it's to create financial freedom. Freedom to live the life you want, freedom to support your family, freedom to enjoy your future. Closing speech, ending. So if you have been saving money but you don't know how to invest, don't wait forever. Start learning, start planning, start investing, because the best time to invest was yesterday, and the second best time is today.